Broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone, or I guess good morning for those of you that are in the great state of Texas. It's a pleasure to have you here on this Texas Mortgage Bankers Association webinar, where I'll be chatting with Alex Massa of Appraisal MC about appraisal bias and what it is and what lenders and appraisers can do to manage the risk associated with appraisal bias. For those of you that I haven't met, my name is Lynn Woosley, and I'm a Managing Director with Risk Exec. Alex, would you like to introduce yourself?
Yeah, Lynn, thanks for having me. I appreciate that. Alex Massa, I'm the CEO of Appraisal MC. We are an appraisal management company licensed in 38 states. One thing that I guess helps my credibility on this particular assignment here is that we are a minority-owned enterprise, and bias is obviously very important in our industry at the moment. So glad I could jump in and add some context to what's going on.
Thanks, Alex. Next slide, please. Let's begin with just a little bit of a background. The discussion around appraisal bias really started with a few news stories about minority homeowners that were primarily seeking refinance and had what they thought were low valuations, and on reappraisal after whitewashing, so to speak, the house received a higher value. After that, both of the GSEs, Freddie and Fannie, next slide please, did slightly different analyses looking for evidence of appraisal bias. Freddie focused predominantly on refinance, and their approach was to take the appraisals that they had received to the results of a proprietary AVM model. And they found that Black borrowers tended to receive slightly lower appraised values than AVM values. But white homeowners, especially white homeowners in majority-minority neighborhoods, were more likely than Black homeowners to receive overvalued appraisals. And they defined overvalued as the appraisal amount was at least 10% higher than the AVM amount. And they found that undervaluations were pretty similar in distribution across majority white and majority Black neighborhoods. And further, 6 states accounted for most of the overvaluations of white-owned homes in majority Black neighborhoods. Fannie's analysis focused on purchase money appraisals, and they compared the appraisal value to the contract price value. And they found that in majority Black or majority Hispanic census tracts, appraised values were more likely to be less than the contract price than they were in majority white tracts. And that gap increased as the minority population increased. Fannie went one step further as well and looked at appraisers that had sufficient volume in both majority white and majority Black or Hispanic tracts, and said, are there individual appraiser gaps? And they found that potential gaps at least in roughly half of those appraisers. After that, next slide please, FHFA started releasing a appraisal data set. They did note that as attention has been paid to appraisal gaps, they are seeing gaps in appraised value versus contract price decline somewhat. And this slide just has a snapshot of their most recent reporting, where they looked at the from 2013 through first quarter of 2023, and then split that into 2 subgroups before the PAVE task force report or PAVE task force was stood up, and then after the PAVE task force report was released, which is the first quarter of 2023. Alex, what are your thoughts in hearing the results of the Fannie, Freddie, and FHFA analyses?
Lynn, that's a great question. So I think that currently we are all in a period of gathering information and gathering data and trying to figure out what is the most reliable data. I'll give you my thoughts on advantages that appraisers have that an AVM may not. So appraisers are able to really analyze and view condition and quality of properties, from physically looking at them on site for the subject properties, and also being able to analyze condition and quality of comparable sales based on the available data and photos in public MLS systems. The challenge with AVMs is that you don't have the art of analyzing that specific thing that could affect the value. And I'll go back to Zillow's AVM that they were utilizing to price properties for their iBuying initiative, which failed miserably. You know, an AVM that they had spent billions of dollars investing in to price properties in order to buy them and make a profit off of them didn't work. So I think we still need to gather more information. Right now, we've got I know you'll share resources later. We've got other institutions doing analysis. We've got Brookings Institute, you've got the American Enterprise Institute, and all of them have conflicting data of what's really going on here.
And conflicting conclusions about what is happening. You know, that I think that's one place that the FHFA data set may really help, because we can at least start with the same data with different analyses.
Correct, yeah. So, you know, I'll go back to my experience as an AMC. We have tens of thousands of appraisals that we manage across the nation. We haven't come across a claim of bias quite yet. I think everyone's jumping the gun a little bit. There is some work to be done. As of today's date, I don't think a single appraiser is yet to be adjudicated of bias, but I do see some room for improvement on how appraisers communicate within the report.
Thanks, Alex. Next slide, please. One of the things that FHFA did was they did an automated word search of the freeform text fields, both in property description and in neighborhood or amenity description, in appraisals that were received by Fannie or Freddie. And on the right-hand side of this slide, you see some of the phrases that they found, you know, explicitly describing the racial makeup of the city or the languages spoken in an area. What types of, for example, religious amenities or racial or ethnic amenities, or amenities oriented to a particular racial or ethnic group might be available, or the you know. Now, to give a little bit of, I won't say cover, but a little bit of context to some of the phrase usage, like the bullet that says the area is a white flight red zone. That was part of a historical description of a particular city. They said this was a whites only city. It became a white flight red zone and now is racially and ethnically diverse. That's not as objectionable, perhaps, as just saying this is a white flight red zone would be if you were talking about current status. But I think there are some opportunities there for appraisers and appraisal reviewers within lending institutions to pay a little more attention to the descriptive language that is used in those free form fields. And it looks like Fannie, at least, is starting to give a little more guidance as to terms that they would find objectionable. That's what the left-hand slide of this side is. How will you implement that guidance about objectionable content or phrases? Or how will you instruct the appraisers that work with you to implement that guidance?
Lynn, thank you for that question. Ultimately, this is the responsibility of the appraiser to understand what changes are coming, what words can and cannot be used, what's subjective language, what's objective language. And Freddie Mac, Fannie Mae are sharing this content. USPAP is adapting some of this content in their new 2024-2025 update. So currently, it's not completely clear on what words exactly need to be utilized or extracted or taken out. But this is the guidance that Freddie Mac put out, and I can't simplify it more than what they wrote here. Incorporating terminology or veiled language that may be code words that could indicate underlying bias that include but are not limited to pride of ownership, crime-ridden areas, desirable neighborhoods or locations, or underlying neighborhoods or locations, gentrification, preferred community, up and coming, predominantly Hispanic or Black neighborhood. So this is the challenge that appraisers have, is understanding what terminology is acceptable and what is not, what is objective and what's subjective. And I think what we're seeing in appraisal reports, it's basically within the property description or neighborhood description that we're finding this. So our guidance to appraisers is exactly what HUD and Fannie and Freddie are stating. Re-look at your language. Right now, the only real guidance that they've given us is words or phrases that can't be utilized in alternatives to those words, but there are words that may be veiled as possible bias that need to be re-looked at in appraisal terminology. Look, language changes with times, and political correctness continues to change. And really, at this moment, from a 30,000-foot level, from what I see it is, they're just asking appraisers to be politically correct and remove all bias, which I understand that when reviewing and reading reports, and as a certified appraiser myself, writing reports, writing in a different way, in a more subjective way.
And I think there's also an opportunity there at lenders. That's my background. I was a lender before I became a consultant, and I have been on both the credit side and the compliance side of lending organizations. And many of the organizations that I've worked with, prior to the discussions of bias, the appraisal review function was often quite limited. It was, is the value per square foot reasonable? Are the comps reasonable? Does it support the loan? Done. Given the focus now, it might be a good idea for lenders to have their appraisal review function also take a read of those free form descriptions and see if there is anything that they might want to have revised before finalizing and accepting the appraisal.
100% agree. Look at the addendums. Maybe this is something that down the line can be improved. There's a lot of narrative in appraisal reports, and maybe it needs to be less narrative and more just statistical analysis or a different analysis. So again, we're in that gathering information phase. My suggestion to lenders is focus on the narrative and review the narrative very closely, but also continue to see what Fannie, Freddie, and HUD is rolling out on language that is acceptable to them.
Next slide, please.
Can you hear me?
Yes.
Just like to, this is Mark Bond. We've had internet outage. I had to do pals to we're going. Can you hear me?
You're breaking up a little bit, Mark.
Okay, I'm still in a bad cell neighborhood. Apologies here.
You're much clearer now than you were when you began.
Okay, well, anyway, my apologies. I've been trying to log on here for the last 45 minutes, and just as I drove off, in frustration, trying to find some place with better internet. I've got to notice that our internet is down. So I'm calling.
Well, we're glad you were able to join us. Do you want to take a moment and introduce yourself?
Sure. My name is Mark Bond. I'm a real estate appraiser. Been appraising for over 40 years. Have the MAI designation, the SRA designation. Past president of our chapter here, the North Texas chapter. So I have a lot of appraisal experience in the years of practice. I've had an office as large as 20 appraisers. As I'm getting gray in the hair, I've downsized. There's just myself and one appraiser has worked with me for over 30 years. And in terms of bias, I was born in Mexico. I was raised white Methodist. I have a Jewish wife, Jewish kid, Mormon son-in-law, white daughter-in-law and grandkids, a Hispanic daughter-in-law, and a member of the LGBTQ transgender family. So we've covered it all in our family as life has grown up. So anyway, that's where I'm coming from, and let's go from there.
Well, you were able to join just in time for our discussion questions. And the first question I want to throw out to you and to Alex is, what are common challenges or biases that residential property appraisers might encounter when assessing properties? And I'd like to focus on 1 to 4 family resi here, because that's where all of the attention is being paid right now.
Yeah, Lynn, I'll jump in on this. Several challenges that I see appraisers are facing. One of them might be trying to explain why a certain location that's closer to a certain place of worship might be worth more. The terminology that's been extracted from appraisals that can't be utilized, and I understand why, are synagogues, churches, mosques. You go down the list. But in some areas, being located near these places of worship do increase the value of the property. Appraisers are just analyzing market forces that participants determine are valuable. So when you have situations like that, it becomes very difficult for the appraiser to explain what's going on and analyze without sounding biased. So I think appraisers for situations like that may need better guidance. Again, this goes back to challenges in describing neighborhoods and describing properties without sounding biased, but still portraying to the reader what's going on in factual terms, right? If it's close to a place of worship that increases the property values, then that's a fact that possibly an appraiser might be able to prove. So how do they explain that and stay within the context that Fannie, Freddie, and HUD want?
Mark, do you have any thoughts on that question?
That's absolutely true question, because here with a Jewish wife, the Jewish synagogues, they what they call the Eruv, which is their holy area, and the rabbi marks it off on the map. Says you live in here, you can drive, you can push your baby buggies to the synagogue at shul, and they pay premiums. They pay big premiums for that, and it's a fact. It's like Alex saying, it's a fact that needs to be identified, because if you can go over just across the street. If it's not in the Eruv, there'll be price differentials. And it's not a discrimination factor. It is a true market factor.
It is. You're picking up there on a factor that's important to certain market participants, and it might affect prices that would be then observed, but not necessarily agreed with by other market participants. That other participant might be willing to go across the street to avoid the price premium. And it may be difficult or awkward to describe that valuation difference while avoiding any appearance of bias.
100%, Lynn. That's a great summarization of that.
So now we've described the problem. How can we mitigate it? As appraisers or as lenders, what can we do to mitigate some of those challenges?
Yeah, I think this is what the debate is all about. And how do you describe certain instances like this? I'm sure there are a million other instances that we can come across in a way that is going to be acceptable and not portrayed as politically incorrect. At the end of the day, appraisals are an opinion based on what they're analyzing. So how can we best describe this analysis is the guidance that appraisers need right now. With all the information about bias being pushed out, the only ramification or change has been change of terminologies, change of phrases. So let's get a list. Can we work within the list? And that's going to be a list that constantly changes. I think that's the best way to address this for now.
Mark, do you have any
I
comments
agree.
you'd like to add?
Well, again, Alex is leading the way very well. I agree. The main thing that we're seeing in this bias are just implicit words. If you say master bedroom, then you're biased, and they have other gentrification is biased, and Fannie Mae and HUD are turning you in for being biased appraisers when these have been acceptable terms for decades. And so right now appraisers live in fear, and in the fear they lose their ability to be objective and be factual. So I think we just need you can say this, but you can't say that guideline. This appraisers run by guidelines. Fannie Mae and Freddie Mac, FHA had set up these lender guidelines of appraisal rules, percentages of adjustments you can and can't make, the distance from comparables to bracket the appraisals, and all the technical stuff from the mathematical and analytical side of the appraisals. But nobody has come up with a technical, you can't say this word and that word until now. And so appraisers are just kind of like the old pinball machine. They're bouncing around, getting thrown this way and that way. And personally, I feel like appraisers are receiving implicit bias just by a lot of the terms thrown at them. That you're racist because you said this, and until you prove it's racist by providing an unfair number, I think appraisers need to be given the benefit of the doubt.
Mark, how would you address the allegation that appraisers are sometimes excessively subjective?
I don't see those reports, so it's really difficult for me to say. That makes me have to make an assumption that is just not in my factual basis.
I know.
For example, I've been reading through
Go ahead.
I'm sorry. I've been reading through. I've done a lot of research on this, and I'm really sorry for being late because Fannie Mae does not like inferior, superior, those type of terms of being potentially biased. But in the beginning of the appraisal forms, that's the way you presented it, as this one is superior in condition or inferior in condition, and you made an adjustment based on that. And now they're saying they're improper words. So I don't see that much of it, in all honesty.
When, in your experience, and this is, Alex, both to you and to Mark, in your experience, when there have been questions raised about appraisals, either that were ordered through you in the case of an AMC or completed by your firm, what's the most common question that is raised? I know what I used to see most frequently was choice of comps as a lender.
That's a great question. It doesn't get questioned very often if the appraisal makes value on the sales price. So I think let's start there. I'll give you some context and some background. So when anyone's doing a refinance and it's ordered through us, we do not provide the appraiser a predetermined value. The appraiser is going out there to determine a value, and we expect them to be objective, impartial, and unbiased, and provide the support for their conclusion as an opinion of value. With purchases, it's a little bit different. They are required to receive the contract and analyze the contract, so the appraiser knows the contract price. What they don't know is what race or ethnicity the buyer is. The borrower is not at the property. So again, I think with purchases, it's probably a little bit easier to be unbiased towards the borrower because you don't know what race the borrower is. So the challenges come when the value is not supported, or the value that the appraiser states is not supported in the value conclusion and doesn't support the contract price. So at that point, that's when I've seen the most claims, not of bias, but of the appraiser not doing their job and filing complaints against an appraiser. I think that's where we're seeing most of these issues come from.
Absolutely. Alex, I agree 100%. In the old days, before 2008 crash, a lot of times the lenders would call up and say, "Hey, can you make a refinance of this for $250,000?" And appraisers would be asked to research it. And technically, according to their appraisal ethics, they can't, because that in itself is an appraisal. But that was the practice in 2008 after the financial crash. Fannie Mae and Freddie Mac said, "No, you can't go. We can't give you an opinion as what we think it's worth. You have to go out there and form your own objective opinion." And at the same time, they said, "We want you to know the sales contract price so you can see if it's supported or not." So they have us running blind on one side and with knowledge on the second side. When you're running blind, typically it's the refinances for the people who are unhappy with the value estimate. And we typically find that owners will have the best house on the block and they're most proud of it. And it's a pride factor that helps them. It doesn't matter about race. A lot of times it's the pride that they want to know how much their house is worth and how they've been smart.
There's probably a little bit of motivation difference there too. If I am purchasing a home, I want that appraisal to be as accurate and, quite frankly, as low as it can be and still be appropriate, because that's money out of pocket that I'm having to pay to buy a home. If I'm refinancing, I want my value to be as high as possible. And when you combine that with the different information set that the appraiser has, it's not surprising that you may see more questions raised about refinance appraisals than you do about purchase money appraisals.
That's, again,
what's interesting. Go ahead, Alex. Yeah.
No, I was just going to say, Lynn does a great job of summarizing our wordy responses, Mark. So I just want to give you kudos to that, Lynn. But correct, that's accurate.
Yes, and what's interesting too is appraisers, we get put into tough scenarios. If we go back 2-3 years ago, we had some hyperinflation in most of the housing markets. We were seeing 20-30% a year rate of inflation. And when we were doing the sales, the realtors would often say, "I know we don't have any comparables at this price yet, but I got 15 offers," and they'll give me a spreadsheet of 15 or 20 offers on the house, all above list price, all people paying $10,000-$20,000 over. And that was the market, and it was really tough to make it. And we had to analyze it, and that's what the market was. After a while, when they started selling, you could start tracking that, and we could start tracking in price increases, but we're shooting from the hip there at first.
And I think a
And the
sharply
pre-fi
declining market gives you the same problems, just going the other direction, right? Think about what we saw after the
it
mortgage.
does. Okay, after the what?
Think of what we saw in the aftermath of the mortgage crisis. Some markets saw 40 and 50% declines in value in a very brief period. And if you have that sharp deflation of prices, you get the same issue as you just described, just going in the opposite direction, where a value that might have been supported 6 months ago is not supported currently.
Exactly. In that case, appraisers had to look at listings when you in a tract neighborhood, and the listings were $20,000 or $30,000 below the last couple of sales. You made minus time adjustments.
Yes. There's been a lot of discussion about whether tools like automated valuation models can help promote fairness and accuracy. As somebody whose background is in model building, my big concern there is garbage in, garbage out. Whatever you trained those models on is going to influence the values that come out of them. I'd like to hear your thoughts on using AVMs or other data and analytics tools as either instead of or as a companion to appraisals to help you set values. What do you think the pros and cons are?
Lynn, I'll jump in first. Pros and cons. I think it should and can be used as a tool to assist appraisers. I don't think that there is a model. Again, I'm going to go back to Zillow, spending billions of dollars on a formula for AVMs that didn't work. I think it's a tool to help analyze. And Freddie Mac and Fannie Mae have the UCDP, and the UCDP findings, which is basically mining all the comparable data in the market area. It's probably the best tool that can be utilized. It's just not a tool that's shared with appraisers. So maybe formulating a tool that can be shared with appraisers based on UCDP findings and having the appraiser address the findings if there are any discrepancies or if there are any comparables that are suggested that weren't utilized, why or why not. The appraiser can go back and analyze and explain. We don't have that right now. Appraisers don't have AVMs. Listen, Lynn, as an AMC, we do provide AVMs to some clients that want AVMs. And there are 4 or 5 different AVM services that we utilize, and you can't imagine the variance of prices in these 4 or 5 AVMs that we utilize. If I was to order 4 or 5 appraisals from a group of appraisers, the variance would be less than the AVMs. So just to put that in context, but they can be utilized as tools depending on how much information those AVMs is willing to share with appraisers.
And I think there's also the opportunity for a professional appraiser to have not only, they can bring a more current appraisal valuation. If you're building something, all the AVMs are built on historic data. It may be recent historic data, but they are built on historic data. And there may be new factors arising that a professional appraiser could detect that the AVM might not know about yet. I'll give you an example from a neighborhood near mine. Neighborhood has a golf course. The city is taking the golf course to turn it into a passive park. You cannot tell me that homes purchased in that neighborhood before the city took over the golf course have the same value as after the city took over the golf course. It's a different amenity. And if you're looking for a golf course home, you're no longer going to be interested in that neighborhood.
It's 100% correct, Lynn. I can name numerous examples. I can name examples where appraisers were turned in and complaints filed on them for situations like that. One that comes to mind that we helped an appraiser fight was a property that was in the gated section of the subdivision, which this gated section was only encompassed 2 streets. And the price point within the gated section was much higher. The findings showed that there were similar size sales within the same subdivision that were 30% less in price point, of course, but those were outside of the gated section. So if you don't put eyes on it like the appraiser does, if you don't drive it and understand the community, you're not going to know. AVM or any findings, unless analyzed properly, are not going to give you the most accurate data. AVMs can't think, they can analyze. That's it.
They're a great way to compile existing data for comparison, but as you will hear, freely both not just admitted but encouraged in different conversations about using advanced algorithms to in access to credit, they need human oversight.
They do, correct. There's an
I agree. Yeah.
Go ahead, Mark.
Go ahead, Alex. Yeah.
No, Mark. No, I was just saying there's an art that they can't be. You can't form an algorithm to do it all. You're right. There needs to be some kind of human analysis there as well. Mark,
in my opinion, I always think in analogies, and since COVID, we've had a lot more doctor phone calls. You go visit the doctor via teleconference versus seeing them, and they can do a whole lot with the teleconference, but it takes good eyes on, and sometimes they got to touch you, feel you, and look at the color of your skin or your whatever your situation is in order to give you the proper diagnosis. And it's the same way with appraisers. You got to be out there and touch it, see it, feel it. Because I see pictures all the time in MLS, and I go out there to see the house, and the pictures look so much better than they do in person.
Oh yeah, and that's going to become more of a challenge with AI generated pictures. That'll be a big challenge for sure.
Kind of like social media pictures with all the filters applied versus meeting someone in person.
Right.
Yeah.
Next slide, please.
So now they can furnish the houses fully by the photos. Just drop the furniture in.
Yes.
Lynn, one last thing I wanted to comment, because
Sure.
you said you were talking about tools. So the appraisal management software that we utilize does have a tool to sift through and take out words that are within a certain list. The problem we're having is we have multiple lenders that have provided us various lists that are very different. I think it's valuable to all come together to get one master list, or one, I don't even know if I can say master list anymore, one condensed list that we can all utilize in order to push this out, and appraisers have the understanding that these are words or phrases that can't be utilized.
And that would probably help with consistency and descriptions too. If there was a consolidated list of don't use these are okay, so that it would be easier to compare across appraisals and appraisers to, if you're a lender that is trying to test for bias within the appraisals you receive, if there is a single list of things not to say, that makes your testing far easier, as well as making it more easy or reasonable for appraisers to produce quality work that won't be challenged for bias.
100%. We can't use this tool yet because it doesn't encompass all the lists that we're getting. So, we're left to do it, basically by reading the report.
One of the questions
right,
or recommend. Go ahead, Mark.
I would say our software also does a similar checklist for potentially biased terms. But that's a never-ending change at this point.
One of the recommendations that came out of the PAVE task force was to increase fair lending or fair housing training for appraisers. Can you all share with me a little bit about what the current training for appraisers are on how to recognize and avoid bias, how to ensure that their appraisal actions and reports are consistent with fair housing?
Well, the appraisers go through a lot of education courses about bias and training and fair housing. It's all part of the standards of appraising. And myself, I also have my realtor license. So as a realtor, I get a double dose of it. So I don't know what more we can do to make people more sensitive to it. You go through the courses, and then you got to just get in the field and practice and practice right. Hopefully you don't offend anybody the first time through.
Yeah, just to add on to that. Oh, sorry, Mark. I didn't mean to cut you off.
Oh, it's all right. I'll add to it here after you.
Yeah, there are sections of USPAP that deal with bias and appraisers being objective and impartial and unbiased, and they're just expanding on that. I know they expanded on it in the 2024-2025 USPAP update and USPAP version. I have not taken it yet. It literally just came out a couple weeks ago, so interested to see what changes there are there. It's been ingrained in our education since I started in the industry in 1999. So I think it's just moving it to the front of the list and reiterating what appraisers should and should not do.
Yeah, as we've chatted, we've talked a little bit about some recent changes. You just talked about the pending USPAP changes. We mentioned earlier that Fannie and Freddie have some additional guidance that will taking effect on terms not to use. And we know that the PAVE task force made some recommendations, and there may be more to come. What other recent regulatory changes or industry guideline changes are you aware of that appraisers or the lenders that they're completing appraisals for need to know about?
Yeah, Lynn, I'll jump in and answer this question. Certain states, let me rewind. Appraisers, once they're licensed or certified, need to do continued education. It's roughly 28 hours every 2 years. And some states are adding a certain amount of hours to be dedicated to bias. I know California just rolled out, I think it's a requirement that you take a appraisal bias class that's 3 or 4 hours long. I think that that's going to come out in most states and just become part of the continued education every 2 years. So outside of that, again, the growing list of words like we've discussed and phrases that need to be erased or removed from appraisals.
Mark, any pending changes on your mind?
No, I think Alex covered that pretty well. I'm sure we're going to have some classes come down and help coach us on words. But what I was going to say is it is all right now. The potential bias is all about words. I haven't seen anything in the practice of appraisal that says this practice of this adjustment or going this far for comparable is biased. And so we're basically talking about semantic. And unfortunately, I'm going to throw a cog in the wheel here on PAVE. I've read PAVE twice. The first time I stopped on page 4. And this is a quote here from HUD Secretary Marcia L. Fudge. And the reason I say this is because several times in the PAVE, it seems like it's a group of non-appraisers trying to decide what is a good appraisal term. And Marcia L. Fudge is the HUD Secretary, and she says in her quote, "I live in an all-black community. My lot and my house are bigger, yet my home is valued at $25,000 less than the house 2 doors from me, which is in the all-white community. And this statement just threw me for a big loop, because how can you be 2 doors away from an all-white community? I just don't see that. And the $25,000 less, I mean, who's the source of the less? I mean, is it tax roads? Is it appraisals? Were they bigger? Were they smaller? And so a lot of this premise, this is the premise that's set up in page, and we're going to go around and chop up appraisers for words they use. And so I have problems with some of that, because I don't think even you, I don't think anybody can say that a house 2 doors away is an all-white neighborhood and 2 doors the other direction is an all-black neighborhood. And again, that's on page 4.
Are there any new collaborative efforts, or partnerships that are developing within the industry to help increase transparency in property appraisals? It seems to me sometimes, looking at requests for reconsideration of values, and I've also had the chance to look at some complaints about appraisals that lenders have received, that sometimes the root cause is the borrower not understanding what an appraisal is and how a value is assigned. Are there opportunities to be more plain English and transparent so that the borrower understands the appraisals that they're receiving?
Oh, Lynn, that's a difficult question, because appraisers are not in charge of the forms that they're utilizing for the appraisals. So the forms are Fannie and Freddie Mac forms, and they're really written to underwriters and to Fannie and Freddie. They're not easily read by the consumer. The consumer is not the intended user. The intended user is the lender and Fannie and Freddie, really whoever your client is. So that's a question for that. I think that's a bigger question that we can't answer as appraisers, because of our restraints on what we're allowed to utilize. Now, can we explain it to the consumer? I think there might be some guidelines against that as well. We can't even discuss the appraisal with the consumer, because the intended user is the only person that we can explain the appraisal to. So I think this is a question that can't be answered by appraisers.
So maybe that's a question that's better, would be better posed to Fannie and Freddie or FHFA, or maybe the banking trades. What can they do on the lender side to help promote transparency and better understanding of what an appraisal is and is not? Now that because borrowers do routinely receive their appraisals now, which they didn't always, and that may be part of why more questions are arising.
I think on top of that, understanding what guidelines appraisers are given, it's got to be based on historic sales. So you could go out to a property today, and then tomorrow a new comp sells that could maybe help the appraisal either show higher value or lower value, but it can't be utilized because the appraisal is as of a certain effective date. So I think understanding the guidelines, and the guidelines really state that it's as of the effective date, and that the appraiser has to utilize the sales and that are locationally and physically the most similar to the subject property. And it's as simple as that. That's what the appraiser is trying to accomplish.
In our practice, we've got a couple of good lenders who have appraisal departments themselves, and when there's a rebuttal, the appraisal department gives them a list. They want their comments of why they disagree, and they want them to present 2 or 3 comparables that they believe the appraiser should have used. And those are always interesting, because at that point, as the appraiser, we can see what their comments are, what they disagreed with as far as our comments in the appraisal and which comparables they think are valid. And sometimes it's interesting because they wind up giving us back the same comparables we had in the report. So they don't understand the process, and in honesty, they never can understand the process. Just as we go, again, here's an analogy. We go to the doctor, they hand us an x-ray. We don't know what it means. You know, somebody's got to tell us, you know, what one spot means or what that crack means.
Mark, you touched on one of my next question. Now, some of the guidance that's come out for lenders, particularly bank lenders, has been that lenders should maybe beef up their reconsideration of value processes, make sure that all of their loan officers know what the ROV process is, and they have good, consistent approaches internally. As an appraiser or as an AMC, if a lender receives a request for reconsideration of value, what happens next from your end?
Yeah, Mark, I'll start and then you can explain what the appraiser does. So from our end, when we receive a reconsideration of value, first of all, it's you have to understand that we have heirs compliance with Fannie and Freddie on conventional. And for FHA assignments, the only person that can request a reconsideration of value is the underwriter. So for FHA assignments, we're getting verification that this was underwriter requested. Now, when we get a reconsideration of value, typically it comes over in the narrative format. It's not just always, here's 4 sales, why were these not utilized? And when we get the narrative style, we've got to clean up the verbiage to make sure that it does not influence the appraiser's opinion of value. We're just extracting the facts, whatever the facts may be. These 3 sales, please explain why they were not utilized, and also here are upgrades that were not mentioned in the appraisal report. Please comment. So we're extracting the facts, and then we send it to the appraiser. So then, Mark, I'll hand it over to you.
Okay. You pretty much summed it up again, Alex. And is the appraisers, we'll look at the comparables, look at the data, and we're human. Sometimes it's a simple overlook that there was a pool proposed that we weren't given the plans to, and it's a quick fix so we can put the pool into the refinance of the house. And other times we look at it and find out it's a different school district. And in Dallas we have some of the urban school districts are becoming very popular again, and there's value differences between one school district, elementary school, and another one. Well, if there's something like that, we can provide a change too. And if it's not reasonable, valid, then we stand firm. And yes, I don't know what else to add after that.
Have you seen any increases in requests for reconsideration of value since we've started discussing appraisal bias more broadly?
I haven't. We've seen actually a decrease. We keep record of this. We saw a lot of it during the pandemic when values were skyrocketing quickly. You have a willing buyer and a willing seller, but there aren't any sales to support it. So they're going to do everything in their power to increase the value. So we saw a lot of it then. We're not seeing as much now. But we're also seeing less appraisals coming in below the sales price now. So that could be a factor in that percentage.
Yeah, I think the pandemic was, and this is my highly technical term, just weird. Because you also had lenders that were more likely to request appraisal waivers during that period. You had rapidly increasing home prices, and you had more desktop or exterior only appraisals because of some of the restrictions on face-to-face contact. And That seems to me a combination of increasing prices, more waivers, and some at least temporary changes in the ratio of desktop or exterior only to what we'd seen historically might be a good recipe for having an uptick in requests for reconsiderations.
Yep, 100% agree.
Agree. Yes.
We're getting close to the end of our time. Mark, I'd like to turn to you first and see if you have any closing comments you want to make.
Yes, I've been appraising for a long time, and I'm old enough to, I saw discrimination in real terms, real time in my life, and highly against it, and feel like overall our system, our terms are that are pretty much low discrimination to almost no discrimination. It's going to always exist. Somebody's going to prefer McDonald's over Burger King. We're always going to have a preference out there. Sometimes they're going to get interpreted as racial, and sometimes they will be racial. But overall, I think it's good. What's sad is basically appraisers are becoming a punching bag for the inequity in home ownership. And they're looking at terms and deciding that appraisers are biased, and therefore in this PAVE event that we don't have equal ownership because appraisers are biased. And I reject that. And otherwise, I think the system's good, and the appraisers are still there.
Yes, I'm sorry. I thought you were finished, and I didn't mean to interrupt.
Oh, okay. The last thing I'll say is appraisers right now run in fear of being called a racist. They are racist or a rapist or an embezzler. I mean, some of these things you can't ever take back once somebody is labeled as that. And they're terrible labels out there. I have a lawsuit here I did not get a chance to discuss, which an appraiser was, in my opinion, unfairly called a racist. And you hear the PR side of why he was, but the press is not giving him the counter side of why he wasn't. It was technically he wasn't. So from there, go to Alex.
Yeah, Lynn, thank you for giving us the opportunity to speak at the end here and summarize. We've got several thousand appraisers on our panel across the country, and my observation, being involved with the AMC since 2009 is that they are good men and women. They want to do good. They want to follow USPAP. They want to appraise in an unbiased fashion that's objective. And we, as appraisers, understand that times change, and we want to know exactly how it needs to be done. And I think this is where the confusion and, like, to what Mark is saying, that appraisers are writing scared because there's no concrete, I guess, direction. And I hope that we find direction here quickly, because appraisers just want to do a good job. They want to protect lenders, they want to protect borrowers, and ultimately we just want to continue being a part of the process. And we think that there's great value in us being part of that process.
I think there is and will continue to be value in having appraisers as part of the valuation process. To our audience, we have included in today's slide deck a couple of pages of resources. If you want to learn more about appraisal bias and some of the pros and cons out there, those are available to you. As we reach the end of our time together, I would like to thank you for all of your time and for sharing your knowledge with us today, Alex and Mark. We really appreciate your participation. TMBA continues to work to bring you great webinars like this one, and I hope you'll check out the homepage at texasmba.org for the upcoming schedule, and watch for those emails from TMBA reminding you to register. Thank you, everyone, and have a great rest of your day.
Thank you, everybody.